Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you today. Robert Leshner, founder and CEO of Superstate, creator of Compound, is our guest. Galaxy and Superstate announced today on Wednesday, September 3rd, that we had tokenized our stock with Superstate's help on the Solana blockchain. We will get into it with Robert about what that means, what Superstate is working on, what the future of stock trading could look like if stocks move on to public blockchains. It's a very fascinating conversation, extremely timely. Check out our white paper on galaxy.com/research introducing tokenized GLXY for comprehensive additional information about the project, including disclosures and disclaimers, but also process fundamentals, our view of the future of tokenization. We'll also check with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets. And before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities, including Galaxy securities. What a big day here at Galaxy. I've been working on this project along with Thomas Cowan, our head of tokenization, and many others at Galaxy and at Superstate to announce our tokenized Galaxy stock. These are real shares. Tokens themselves are the shares themselves. They're not wrappers, not SPVs, not tokenized, not synthetics, not swaps, right? These, if you own an on-chain share of GLXY, you own a share of GLXY. That's what it is. We get into it in detail with Robert coming up, but before that, let's get into it with Beimnet Abebe. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So where are we? I mean, it feels pretty similar to last week, although I would say that the crypto moves feel like they've settled a bit. Bitcoin at 111 plus feels like it's not hunting for a new local bottom at this moment, maybe a little sturdier. Yeah. But everything else feels pretty much the same week over week. Is that your read?
Yeah, everything kind of feels like the same in general. I think that's a function of, relatively easy monetary policy softening data, and that's generally supportive of risk assets. And there really isn't like a catalyst for us to kind of go lower. There are some positioning dynamics that are a little concerning and some seasonality factors that are a little bit concerning. So, CTAs are in 90 plus percentile of net buying, net longs. Risk parity funds are also very long. Gross exposures, for long short hedge funds are, in the 90th percentile. You've had, 16 of the last 18 weeks of like strong retail buying. And so, there's a little bit of concern around people are just very long
just
right now.
Fatigue or too extended or
it's very extended. That's not to say you can't get more extended.
I love it when you say that. You're like, it's it might be overbought. Not saying can't get more overbought.
Correct. But we've been rallying for the better part of 4 or 5 months.
Yeah.
And it's been kind of like a one-way street. And and markets, can trend like that for a really long time. I just think that, when you're in this type of market, it kind of makes sense to own some hedges, right? Just because vol tends to be a bit lower, when you're in a up only grind higher type of mode. And so
hedging can be cheaper too.
Yeah, correct. Yeah. And so I think it's prudent to have some hedges on, particularly in things like Bitcoin where vols are in the mid 30s. Which is historically super low. But there's not really a catalyst you can point to being we're going to go a lot lower. The one area of concern, that's pretty notable for this week is obviously the employment data. So we've got non-farm payrolls on Friday, in addition to the ADP employment report, which comes out tomorrow morning at 8:15. And the setup here right now is, you've got a ton of cuts baked into the market. September is like 24 bips priced. And, by December of this year, you're pricing in 56 basis points.
So we're looking at
2 to
half
3,
a percentage cut potentially by the end
2
of the
to
year.
3, like,
Another 50. Yeah. So yeah.
Yeah. So like, I think that pricing can go a little bit closer to like a full blown 3 by the December meeting. And that's totally possible. But at the same time, like the economy is doing just fine. Like there is weakness in the labor market, but growth is doing fine and there's still upward price pressures.
Yeah.
And so, right here, right now, like given this rate pricing and given the dynamics in the economy, the market is kind of signaling that this might be a little bit of a policy error. And
to do the cuts,
yeah, or this aggressively,
yeah.
quickly without knowing the data. And the chart that I point to is just gold.
I was just going to bring this up.
Fresh all-time highs.
Really, I mean, not so much in like Bitcoin or crypto terms, but mooning. I mean, actually like big, giant green candles.
Correct.
Yeah.
Correct. And especially, it's more impressive given how much bigger it is.
That's what I'm saying. Yeah, it moves a couple like, $100. You're talking about like
the world's largest asset.
Yeah, it is. It's the world's. It's larger than the top stock, the top
Correct.
5 stocks combined.
Yeah. And so it's really impressive to see, a rally like this. But I think it's just more like investors have just like lost kind of, their appetite for a lot of other assets per se, because, okay, do you really want to own long run bonds in the G10 world? Like, no, because we just keep issuing like a ton more and inflation is still an issue. And like, if you're cutting rates, like inflation is probably going to be a bigger issue, not a smaller one. And then there's like a sentiment like against the dollar, you kind of want to de-dollarize a little bit. And if you look at places like, Japan, they're considering, raising rates. And that's why you're seeing, Japanese back end yields like literally moon, like Japanese 30s are at 330, which is kind of like
people just dumping them.
And like, the 30-year in the UK is like close to like 5.7%.
I mean, the US 30s was going higher too.
Today you had a little bit of a rally, but you're approaching 5% again.
Yeah.
And, a lot of that's driven by the fact that we're just issuing so much. Like this week alone, like, you're talking about like, over $100 billion of like net drain from the market in terms of like net new issuance. So every week, like that proceeds at least for the better part of September, like you're net draining money from the system, and like buyers of those bonds have to like come from somewhere. Yeah. And it's not just like it's not just sovereign issuance, but it's also corporate issuance. Like there's a ton of corporates that are issuing debt with investment grade credit spreads like at super historically low levels. And so you have a world that's like flooded with debt, and like if folks don't view that as a store of value, like the next best alternative that's big and scalable, might be gold.
Yeah.
And so it's definitely having a moment in the sun right now. It's glistening.
It is. It's glistening well. And digital gold is it's still, people were very bearish over the last several weeks. August was a tough month for Bitcoin. I mean, it looked down only for 3 weeks. Not huge down, but it looks sturdier now. I mean, I wonder, like, what do you think turns it around and takes us to new all-time highs in Bitcoin this year? Is it just time? You know how sometimes the market just has to, like, work through its stuff, and if it can't go down further, then sometimes it just goes up more because it's got to do something?
If it can't go down, it'll go up.
So sometimes it doesn't – I don't think it needs, like, a catalyst. I think
I mean,
what do you think?
Here's the thing. There's just so much, like, optimism baked in already. Like, it's an approved ETF asset class. People can hold spot now. There's so many different ways to access Bitcoin liquidity. Like, the administration's super involved, super friendly in terms of, regulating it, endorsing it.
You're sort of like, what more can possibly happen?
Like, there's just so much
just
good
more
stuff.
People have to buy it. Like
more people have to buy. And like, and a lot of the upward price appreciation has been driven by these digital asset trusts. And, MNAVs have been moving a lot lower.
Yeah.
Right? Like everywhere from like Metaplanet to Bitmine to, SBET, like, you name it, like the MNAVs have been compressing. And so that in theory should mean that there's less buy pressure on the underlying asset. But again, like you're like, 2-3% higher in the S&P away from those MNAVs being higher again,
Right,
probably.
it's true. Yeah.
So,
and then they can issue again and do the flywheel more.
Exactly.
It is quite interesting that that's all it might take.
That's all it
but
might
I agree. I mean, I think ETH had a little bit of a catch-up trade generally, but also has had ferocious ETF buying and Tom Lee buying.
Yeah.
Truly shockingly large amounts, actually. I mean, ETH outpaced Bitcoin ETF inflows for like 6 weeks in a row.
Yeah.
And ETH is, 1/5 the size of Bitcoin. So to even it would be at sort of market cap parity if the flows were a fifth of Bitcoin.
Yeah.
To be more than shows true outsized performance. But it took that to rally it to 4,900.
Yeah. And then on top of that, like the amount of leverage that piled on, trying to take advantage of the fact that they knew there was this big buyer in the market, it's immense.
Yeah.
Right. So there's a ton of like ETH leverage in the system. But yeah, what I'll say is, and this is like an interesting note, lesson from, George Soros, but he always, talks about this concept of reflexivity, right? And like the DATs are the perfect example of reflexivity because, okay, like, you issue a DAT and you purchase the underlying asset goes up, people view you as a clean way to express that, and it starts going up in value, your MNAV increases, and you buy more spot, and so there's that virtuous cycle that leads to more price appreciation in the underlying asset. But then you also have to think that there is reflexivity to the downside. Like there's a ton of leverage in the system. There's a ton of situations where like you are not going to have that buying. Like the moment the MNAVs go to zero or parity or like negative, like that in theory is like downward pressure. And it's like, oh, okay, so these big buyers in the market are no longer there. What are all these speculators going to do? Right. And so, what you have to be cognizant of is just like that moment where that reflexivity goes in the other direction because, it works both ways.
Yeah.
Obviously, your risk, to the upside is infinite, and to the downside is finite. You can only lose what you put in.
Right.
And so, the distribution isn't necessarily as fair.
Yeah.
Or as even. Sorry.
Right.
But like markets are reflexive in both directions.
They are. I think that's a good point to leave it on with our friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Thank you so much.
Robert Leshner, founder and CEO of Superstate. Thank you for coming on Galaxy Brains, my friend.
Alex, longtime listener, longtime fan. Excited to be on the show.
That's very nice. And we're recording this on Wednesday, September 3rd. It will come out, if you're listening on audio right when it came out, it'll come out tomorrow, so September 4th. And it's a big day for Galaxy and Superstate, Robert. Maybe you want to give the news that we've already said publicly. Congratulations.
So this is a big milestone both for Galaxy and for Superstate. Today, it was announced that Galaxy has, as an issuer, tokenized their stock, the same stock that trades on the NASDAQ, as a token on the Solana blockchain. And Galaxy tweeted the contract address showing that this is live. Superstate is a transfer agent and technology partner to Galaxy. We've worked together over the last couple of months to make this happen. And, for the first time on a major blockchain, and there are other examples of things being tokenized in equities and other asset classes previously, but we view this really as the first major equity tokenization of a major company and a major blockchain that's ever occurred. And it is a beginning of a new chapter of stocks coming on chain led by issuers bringing their official stock as a token on chain, where over time it will be increasingly traded, used in DeFi, programmed in fun and interesting ways, and upgraded from the experience that people have trading stocks in a brokerage account.
Yeah, it does feel like the beginning of a true sea change. I think many of us in blockchain and crypto, and people will know Robert also as the founder of Compound, which is the first major lending application in DeFi on Ethereum. Also kind of created DeFi Summer, by the way, just not to go back in time.
Accidentally.
Yeah, because you guys had like an incentivized like token when you launched your token, and that sort of created the concept of yield farming. So I just want to say Robert's been at the forefront of finance now for several years, but this is different because, and we have this approach with Superstate, which we're really proud of. These tokens are our shares. They are not digital representations. They're not synthetic. They're not wrappers. And we'll talk about that. But, people ask me why it matters. It's easy to trade stocks in the U.S., they say. You can do them on Cash. And it's true. You can buy them on Cash App. I think you can maybe buy them on Venmo now. You can for sure buy them in Cash App and Robinhood, and it's quite easy. But those are sort of just like nice fintechs, like slapped on top of the antiquated system. The stocks are still just the 9:30 to 4 p.m. traded, sort of paper. They really are kind of. Well, it's been digitized, but it's like the worst type of digital paper you can imagine. They're not natively digital. I think there's a lot we can do.
Stacks of paper. I mean, it's like
that's what we wrote. We published a white paper explaining, which Robert and his team and our council and many people worked on. And one of the things I said in that paper was that it actually, like, you need like an archaeology degree to unpack like the layered, stacked on stacked systems that comprise our, capital market structure. This is much simpler and much more direct.
Should we run through that stack that an archaeologist would uncover real quick?
Do you know it all? I'm not even sure I know the whole thing.
At a high level, here's exactly.
Let's hear it.
Okay. So you have a company, a public company. Let's just say Tesla. I'm picking that one at random. It's not that I love Elon Musk or Tesla shares. Totally unbiased. Okay. You have a company and they issue stock. They could have multiple classes of stock. They could have debt. They could have all of these instruments that they've issued that are basically, legal concepts. And when they issue stock, they hire a company called a transfer agent to record their stock. So at the lowest level here, we have an issuer. Above that, we have a transfer agent. A transfer agent records who owns the stock. And it starts off, they say, oh, well, it starts off in our treasury and we're going to sell it to 10 different holders. And a transfer agent records who those 10 different holders are. And back in the day, those 10 different investors would trade those shares, maybe like meeting underneath a tree and handing this like paper certificate to someone else and signing the back to say like, it's no longer Robert's, now it's Alex. Mm-hmm. But, you would have them recorded in one place. Well, that was really inefficient. And so, in the 80s, we said, well, you shouldn't be trading, things that you have to update the records of who owns it constantly. Why don't we simplify the system? So above the transfer agents, we built as a society a system called the DTCC. And what this does is instead of, the shares all being recorded by a transfer agent and you have to update the list of shareholders every time something trades, all of the shares live in a new business built on top. And that business does security, settlement, and clearing. And instead of having a list of all of the shareholders, they have a list of all the different brokers who have clients who own shares. And at the end of each day, you don't have 10 million, records being updated. You have big netting that occurs between like all the brokers and like, each other. And so one broker, E-Trade might have bought 10,000 shares and Interactive Brokers might have sold 304,000 shares, and they net all of this. And so the DTCC has a list of, the brokerage balances, and then each broker has its 10 million customers. Mm-hmm. And they have a database and they record, for each of their 10 million users, how many shares they have. And you have this like incredibly long chain. And at the top, it's no longer stock. What you own in your brokerage account, it's the right to stock. It's called a security entitlement, but you're not actually trading stock. You're trading, something that's very similar. It's very close. There's insurance to make sure your broker's credit risk on this is basically zero, but at the end of the day, you're not even trading stock. You're trading the legal right to stock called a security entitlement. And mm-hmm. This is the chain. And whenever there's, a proxy vote or a dividend or any of these things that companies do, it has to flow all the way up these stacks with all these different middlemen coordinating along the way to do something as simple as processing a payment or collecting a vote. And when you compare this to how tokens work, you're really eliminating all of these different layers. You have an issuer like Galaxy. You have a transfer agent that records its shares. And those shares are tokens on a blockchain. And every time one of those tokens trades, you update the list of the shareholders. And that's the entire system. And it cuts away all of these different layers and removes all of these different steps that are required for something as basic as, collecting a vote or processing a payment. And it collapses this incredibly long chain down to something very simple, where shareholders essentially wind up having a much closer relationship with the issuer directly. There's so many fewer steps.
Mhm.
And the benefits of this are not really seen yet, right? Because we just announced Galaxy, a few hours ago. We haven't seen an on-chain ecosystem built up. But you can imagine that this will enable, shareholders to interact with a company much more efficiently and much closer. So processing a dividend payment, well, Galaxy knows everyone's on-chain wallet address. Smart contracts are really good.
Yeah.
It could be like how you collect an airdrop today. You just hit a claim button and it goes straight into your wallet. You could reinvent voting. I had the opportunity to experiment with token-based governance with Compound, and it became a framework for a lot of others.
Yeah.
You could vote Galaxy corporate events, like firing a board member, or replacing them, the same way you vote in a protocol or a DAO. And by moving the record keeping from stacks of middlemen to just a token, it's just going to facilitate all of these subtle upgrades to the system.
I agree with that. And incredible. Robert Leshner, traditional market structure archaeologist. I
didn't want to be an archaeologist.
I always felt like, you ever hear in New York City that if you dig down, you could uncover prior layers of the city. They just get built on top of each other and on top of each other. That's how it feels.
Rome is the best example. Where Rome, it's it goes so many millennia down.
Right.
Where they're constantly discovering new parts of the city they didn't even know existed. They're like, oh, well, actually 400 feet down, we found a temple,
And then you take something like fractionized shares, right? Every new sort of feature that the traditional markets come up with, they just sort of bolt it on a new, so you have this giant Frankenstein's monster walking around with right? Because fractionized shares are just obviated at the broker level, right? They don't exist, I don't think, in DTCC. So it's sort of they're well, they could end up with some dust when they let you buy a third of a share. Right, it's just sort of they're assuming that they know they have this many share liabilities of security entitlements, and they will meet them. Right?
The craziest thing though is they know how many liabilities there are. They know how many shares are owned. I'm putting owned in air quotes by all the people.
Right.
But there's trade breaks and there's errors and there's reconciliation every single day. Every single day that the NASDAQ and NYSE are open, or any stock exchange anywhere in the world are open, there are errors. There is a miscounting of this. And, I'm not a GameStop truther, on Reddit, Wall Street Bets type, but there's a lot of credibility to the critiques of this system in that, shares are shorted that don't exist, or the total number of shares of a company is constantly miscounted. It doesn't always add up. There's constantly, errors throughout the entire system, and they're subtle, right? And we have this incredible legal framework around the securities, markets to say well, if there's a problem, obviously it'll get fixed. No one loses their money, right?
Right.
It doesn't matter if the numbers don't fully add up. As long as no one gets wrecked by that, it's fine. We'll net it out, we'll reconcile it. Even if we miscount the shares, that broker will have to pay more money later to undo it. It's all good. And it works because there's so much duct tape and elasticity allowed in the system. Because it doesn't add up. There's not a single day that goes by where all the numbers check out and the whole thing adds up correctly.
Yeah, it's and that's what the distributed ledger is perfect at, right? I mean, that's the one. In fact, that would be interesting. I don't think. I guess maybe an unintended inflation bug of supply would be but it's not. Of all the things that have gone wrong with blockchains in their history, miscounting the people's balances, I don't think is one of them. I don't think I've ever heard of that occurring.
If there was, you can see it, right? So if you have some shady project that decides to dev mint, the ledger has the history.
Right. The ledger itself.
Transaction where it went awry, and why and how. So it's the dev minted more tokens to their wallet.
Right. Yeah. But bad behavior is still possible. But again, the ledger doesn't lie. So you can see the books and records aren't what have an issue typically.
Exactly. And this is full circle. But what got me excited about crypto a really, really, really long time ago, how everyone has this story where they're my first day on Wall Street was Black Monday or whatever,
Yeah.
It's I graduated from college and went to work, on Wall Street in the summer of 2007 in like interest rates, like right as the whole system was like starting to collapse really, really quickly. And like a lot of people today in crypto don't remember the great financial crisis. They don't remember what happened. They weren't around for it. But earlier in my career, I worked at a bank as the banking system was collapsing. And one of the reasons why it was collapsing, one of the things that was so scary to me inside a bank, having that as my like vantage point, was no one knew what anyone owned. Every single entity in the space, whether it was a bank, a hedge fund, a clearing firm, everyone had their own books and records and their own view of like what they owned and what their counterparties owned. And none of it really added up. And everybody was panicked. And, when you look at what crypto is in terms of like, okay, it's one ledger that anyone can write to and everyone can see how it works and everyone can see how we got here. It completely eliminates this fear that's created out of, imperfect records and opacity.
Mm-hmm.
And, blockchains are unequivocally, such an incredible technology. So we're all on the same page at the same time in real time about who owns what. And there's no disagreement. If I was, when I was at a bank, it was like, well, like we think we owe them $300 million and they think that we owe them $408 million. Like, I don't know, one of us is right.
Yeah, we got to argue about it.
Yeah, we got to argue about it, in the middle of like, no one has enough capital and everything's collapsing.
Yeah, not ideal. It does feel like if you could rebuild the stock markets and other capital markets from scratch today with today's technology, you would absolutely put public blockchains at the base of them. It's like there was this Chairman Atkins talked about this paperwork crisis on Wall Street in the 60s and how it eventually led to the creation of the DTCC, which is what you talked about, with share certificates being dropped in puddles and lost and falling behind desks and stuff. And it was so bad that something like a quarter of all the brokers on Wall Street went out of business due to excessive back office record keeping cost. And they had to close NYSE for a half day every Wednesday. So trading would stop at noon just to give all the brokers time to catch up with all their settlement and their stuff. And you just think about like, the natural state of humans, I believe, is to work directly with each other, peer to peer. But at scale, that's can be impossible. And, if only there was a technology that would let us trade peer to peer at scale.
Right. And not just that, though, like trade peer to peer at scale, but also invent new systems and tools to make it where we can trade infinitely without anything breaking.
Yeah. And perpetually, 24/7. Let's get a little more specific into what we've done and what we haven't done, I think, for the viewers. We've written extensively about this, by the way. Like I mentioned, there's a white paper. There's plenty of explanation about it. But, for us to hear it directly from Robert, what is Galaxy actually doing? Because you are one of Galaxy's transfer agents. We've hired Superstate as our transfer agent. So you are an official record keeper for our stock. And so then how do the stocks go from traditional format to tokenized format in this way?
Yeah. So in this way, if you remember the stack of intermediaries that exists, what we do is we're a transfer agent that works alongside Galaxy's traditional transfer agent. So, Galaxy went public many years ago. They have a transfer agent that's been recording their stock, that records the stock that trades in the NASDAQ. There's already books and records of who owns Galaxy stock. So the way that Superstate slots in is we're a transfer agent alongside the traditional transfer agent. There's some great, guidance put out by the SEC, in this administration, talking about the role of multiple transfer agents, including crypto native transfer agents, working together to record the ownership of a company. Saying very clearly, you can use these like traditional record keeping, like, okay, we can use the records that are in the DTCC alongside on-chain blockchain-based records to create the full picture. Mm-hmm. And so this full picture is created by combining the shares that exist in your brokerage account that are in the traditional system alongside shares that are crypto enabled and crypto ready. And so what that means is you have shares at one transfer agent, the ones in your brokerage account, and you have shares when they're in token form that are recorded by Superstate, a second transfer agent, and they can relatively seamlessly migrate or bridge between these two worlds. And so you can take stock in a brokerage account, and through a couple, for now, relatively cumbersome steps, you can move it from your brokerage account into token on Solana. And this process works. It's bi-directional. You can go from brokerage account to Solana. You can go from Solana to brokerage account. I could right now spin up a completely fresh wallet, buy a token of Galaxy Class A common stock on Solana, and move it into my brokerage account of choice. It's a bridge. And by combining, TradFi transfer agent plus crypto native transfer agent, what we've really done is build, a composability between these two systems to move the official canonical stock between them. So when we're doing this, the actual stock is moving on chain. It's not a new product. It's not a new instrument. It's not a wrapper around something. It's not buying a bunch of stock and putting it into an SPV. It's not a derivative. It's not a swap. It's not a third party with a different credit risk about whether or not the stock's actually there. It's not a new product that's cash redeemable, but not securities redeemable. What we've built is a bridge for stock to efficiently move between these two systems. And that's what Superstate does. And so, at this point, Galaxy shares now exist in two different markets, traditional and on-chain.
Yeah, I do think of it like a bridge in sort of crypto native terminology. And I also and again, it's different than this, but for people who spend a lot of time following the ETF launches, it's a little bit like a create redeem process, except I don't want to say that because we're not creating shares. We really are moving them, to your point. But, for some of our more TradFi focused people, like it's not that dissimilar, pragmatically speaking, except that, you're going through a transfer agent. You're using the direct registration system, DRS, to tell, in fact, the only other time to tell your brokerage to move your shares directly to the issuer's transfer agent, in which case is Superstate. And then Superstate says, okay, great, we were holding them for you, Alex Thorn. Would you like them in token format? Like, there's literally a button in your Superstate account that just says tokenize, right? And it's just, and to your point, if I want to, I'm done with the on-chain, or for whatever reason, I want to move the shares back, I just deliver them back to Superstate and say untokenize.
Yeah, you burn, and then you send them to your brokerage account.
But I love this notion, and it's so important. You said they're not derivatives, they're not swaps, they're not wrappers, they're not SPV shares, because we're seeing an explosion in equity tokenization, generally speaking, right? We've got Kraken and Robinhood and X stocks from Bakkt, and I just saw today that Ondo announced their big tokenization thing. I'm pretty sure all of those ones that I mentioned by name, those are all wrappers. Not one of those tokens is an actual share in the actual stocks, right? They're all some form of a claim, mostly a claim on a fund that owns the stock. That's mostly the format they're using. None of them are from the issuer.
That's right. But I think they also appeal to different audiences, right? And I think there's a lot of different use cases. So, a lot of these are also offered, whether, accurately or, wink-ish, they're offered to ex-US investors. They're not offered necessarily to US investors because they're not registered, they're not, fitting in neatly to the securities laws. Mm-hmm. But they appeal to different things, right? So like if you're someone who just says, I want something that's easy to trade and I want, exposure to an asset, and I know that there's some like tail risk here that like maybe it's not exactly the same thing. And then in a blue moon, every time there's a financial crisis, like something breaks, but like that doesn't really matter to me. Like I just want something that like basically works. Like I think there's a lot of market for that. But I think it's a very retail focus. I think, as you start to scale more institutional, and you go into the world of like hedge funds and regulated players and, folks that do a lot of due diligence on how things work, there's a lot more of a market for, it's the same shares that you're buying, through a prime broker or a broker.
Yeah.
It's the same shares, I think it speaks to a different audience. And I think both of these are going to coexist. I think you're going to have wrappers, and I think you're going to have native tokenization. I think they're different markets. I think right now people don't really understand that, and they think about it as like, oh, it's all just tokenized stocks. Like it's, it's all
Yeah,
the same, or it's all competing with itself, or whatever.
I've been asked, like, can you confirm that every Galaxy on-chain token is collateralized 1-to-1 with a real share? And I was like, in simple terms, yes, but it's not a stable coin. I was like, the token is the share, so I don't know.
Right, exactly. Right? It's like, and that's the correct question for a wrapper, right? If
Right.
I just like start a startup that goes out and buys Galaxy shares without ever, working
talking to us, for example,
without
right?
talking to you guys,
yeah,
I can go out and buy 100 Galaxy shares, put it in a box, and issue 100 Galaxy tokens backed by whatever's in that box. And when I do that, that's the correct question. It's like, well, how can you prove it? Like, is
that
it
it's in the box? What's in the box?
What's in the box? It's like, the Superstate model that we're using with Galaxy is actually the exact opposite of that. It's like the same assurances that whatever is in your brokerage account are the actual shares. Like, that's what the token is as well. And it's a different set of questions. It's like, what's the, resilience policy of the transfer agent, or like disaster recovery policy of the transfer agent? But those risks are so minute that like no one even asks those questions about the stocks that they own.
Yeah, I agree. But the other thing you were saying, I think you're right. There is a market for those other types of structures, particularly offshore, if it's difficult for foreigners to, open U.S. brokerage accounts and gain access to U.S. stocks, which I don't think it is as difficult as some of the proponents make it seem, but it is somewhat difficult, and I understand it could be, or you only have on-chain wealth and you have no general ability to open a bank account and a brokerage account, but you aren't a terrorist. You should be able to own them. You just simply can't. There's definitely a market for that. To me, the way I think about it is, if we're right about and I'm quite confident we are, about how effective blockchains are for recording and moving ownership of assets. And we know they're extremely effective at this. It's one of their main use cases. Maybe DePIN and gaming and social will eventually also come. But for now, we know for certain that like Bitcoin, Ethereum, Solana, other major blockchains are great at tracking the movement of assets. It's like what they do 24/7. And that will be integrated with traditional finance. Surely the way that stocks are tokenized in the U.S. will not be the wrapped versions, and it will not be synthetic versions. It surely must be the similar way to the way companies issue stock today, that they issue them. Some third party doesn't come and take Galaxy stock and trade it on a different stock exchange. That's not allowed, right? We, the issuer, we get to choose which exchange we trade on, right? And real Apple stock is issued by Apple. It's not, so I feel like we're, Superstate and Galaxy, some people have criticized since we announced this. Well, I can trade, X stocks wherever, blah, blah, blah. And I'm like, well, yeah, but that's not, A, it's not a real stock of Tesla, to use your example. But B, it's not, it's not they're playing the short game. Like, we're playing a long game. We want to remake the financial system in a way that still works for issuers. We don't want to take advantage of them and turn their cap table into these black boxes of SPVs. We want them to be able to know their shareholders, right? Like, we want to play by the rules and do it the right way. It's a little bit of a longer game. It's hence a little slower, but much more exciting long term.
Yeah, it is. And, I think both models are appealing from a market perspective, right? Like, the advantage of permissionless, third-party tokenization is that anyone here can start a company today, like after you listen to this podcast, go out and tokenize all 500 stocks in the S&P 500. You can do that. You could go out, buy 500 different stocks, and then issue 500 tokens against them based on the full faith and credit of your new startup, right? That's totally valid. And I think there'll be lots of them, right? Just like, how many different, stable coins are there? Like, there's a couple major ones, but they're the list of like things that have ticker USD in them. If you go to CoinGecko, I mean, it's crazy, And so wrappers will always exist, but there can only be one official version. And the official version has a lot of advantages that people haven't seen yet. And I don't think people appreciate what the advantages are because Galaxy and Superstate haven't used any of these new advantages yet. They haven't come into the world yet. But here's at a high level, I think some of the really exciting things that are possible with issuer natively tokenized shares that just are not possible with a wrapper. The most basic and obvious one that I think people forget because it's so obvious that it doesn't get considered very often is that an issuer, a public company, can sell stock. That's the entire reason for our capital markets to exist. Companies raise money using shares all the time. A company can't raise additional capital with a third-party wrapper token.
Right.
You can raise capital with your shares on the NASDAQ, in secondary markets, in pipes, whatever. You can do that with a token. And we haven't seen capital formation with a token by a public company yet, right? We just, announced Galaxy had tokenized its stock. But Galaxy could, working with a broker-dealer or whatever it is, an investment bank, ironically, Galaxy probably can't do it for itself, but it could do it for other companies with tokens. But, Galaxy could raise capital using a token. They could sell their token on Uniswap to raise capital. If you're a crypto native person, you can think of this as they can mint tokens and sell, right?
Mm-hmm.
To add money to the balance sheet to build more stuff. That is doable with a native token in a way that's just not doable with a wrapper. You can actually use it. To take this one step crazier, a company legally could airdrop their stock to users. This has not been technologically possible in the traditional markets. It's just functionally impossible. But with, a couple basic filings to the SEC, Galaxy could say, and, all clients of Galaxy Investment Bank, also get our shares as a thank you on chain whenever they trade with us or whatever.
Mm-hmm.
I don't know if you'd want to, but it's possible, right?
It is very interesting, the idea of knowing, well, or you could say, let's say there was there's some DeFi app and we either liked it or wanted people to use it, or
you can incentivize it. Yeah.
We can just say, you know what, congratulations everyone who used Uniswap during this time. You're all getting a Galaxy share. I mean, there is no database of everybody's brokerage account that you could even consider doing that for. So it's not like it's not even technologically possible in the traditional world.
Yeah, I mean, the closest thing I'll say is there are spin outs all the time. Like, have you ever had a stock in your brokerage account and you wake up and it's wait, I have another stock? There's sort of this equivalent airdrop concept in traditional markets where I have a new ticker it was spun out of a company and then it's airdropped into my brokerage account. What is this, right?
That's true.
It does happen. And the brokerage system does enable that. It's a little clunky, but it works.
Well, you got to traverse through the whole stack to get that done. But you're right. Even Galaxy, when it uplisted to the NASDAQ, there were people who owned an OTC ticker version of ours that just eventually, within a few weeks, just auto-converted to the correct new ticker. So you're right. There is some capability there. But,
But the only input into that process is, do you own some ticker? Then you get another ticker.
Right. Can't be you did this activity or you have this many of the ticker or you're right.
Right. You can't use that as an incentive. Otherwise,
and you can't use a third part, an unrelated ticker. For example, you could say, remember the right at the end of their DeFi summer with SushiSwap sort of vampire attacking Uniswap, a company could say, you know what, we're going to give a share of our stock to every holder of our competitor's stock, right? That you can see what a public wallet may hold. So yeah, you could. You're right. There's many more criteria you could use for the airdrop.
Right. You could do it based on on-chain activity. Every shareholder that keeps their shares in Curve, I'm making this up, gets additional shares.
Right.
Because we believe that this is in the best interest of the company. Right.
Right. It's it's very interesting. It does feel like a watershed moment. Can Superstate? What are we? Are we a client of you? I think we're a client of you.
We're an agent of you.
You're an agent of ours. Can Galaxy with our tokenized GLXY or other firms for whom you are an agent, can those tokens trade yet today in DeFi?
So we just announced Galaxy's shares being tokenized today. Right now they're not integrated into any DeFi protocols. There's nothing that exciting happening with them yet. They can trade on a peer-to-peer or OTC basis in the same way that shares today can trade off exchange. Yeah. It doesn't happen extremely commonly when you have an exchange listing. There's not that many use cases for two shareholders to find each other and exchange shares. It can happen today.
It's mostly just not pragmatic today in TradFi because you can't meet. There's not a mechanism. That's
Yeah.
what the mechanism is. The exchange. So like,
I mean, exactly.
yeah.
The exchange is such a superior mechanism that, like, yeah, there could still be bulletin boards even for like an exchange listed company. It's just that like there's not really a point.
Or we could do a private transaction. I could say I'm going to buy your house, but I'm going to pay you half in this stock. Like
100%.
theoretically, you could do that. Yeah,
you could totally do that. And you know, stocks can trade peer to peer or OTC today. It's just not that common, right?
Well, because we didn't have the good tech too. That's part of the thing.
Right. Exactly. So Galaxy shares could trade as tokens, OTC and peer to peer today. I think we'll start off seeing basically zero of this, and I think it'll increase over time as there's more and more reasons to bring the tokens on chain. Right now, very few tokens have been brought from brokerage accounts onto Solana. Right.
I think as of our latest dashboard, it's 21 holders of our on-chain shares at the moment. And I should disclose, I think I'm one of those. So it's like
I'll disclose, I'm one too.
So it's not that big yet, and you're right. But I guess the big question then is, I've thought about DeFi obviously for a long time, and to me today's killer apps, and there are several others, but the top two very clearly are trading and lending. And so if we talk about DEXs in particular, and there are obviously many forms of decentralized exchanges, many of them great, but sort of the iconic crypto native on-chain decentralized exchange isn't an exchange at all. It's the automated market maker, right? Like Uniswap or Orca and Radium on Solana. Like, so, and I know, we've met with the SEC and discussed this. They're thinking about this, how to contemplate the existence of these things. That's the big question I think that people may have is when can we see on-chain GLXY in an AMM?
Hopefully soon, right? I think that is also a watershed moment, right? So massive milestone one, public company on blockchain. Like we've done it. That's, in a lot of ways we've checked the first box. The second box is it trades in a DeFi protocol as effortlessly as people can buy or sell any token in Uniswap, Orca, Radium, whatever. And that's coming soon. I mean, I'm really hopeful for, in the very near term, additional guidance from the SEC for how securities interact with DeFi protocols, what requirements exist, on different participants from the ecosystem, requirements for broker-dealers, requirements for issuers, requirements for transfer agents. We've put forward some proposals to the SEC on what this looks like. A lot of others have as well. Coinbase has floated its own proposals. There's a lot of people that have gone in and said, here's what we think it should look like and what the requirements should be. And there's a lot of indication from commissioners and public speeches that there's going to be more guidance. There's going to be more rules. There's going to be like some sort of framework for all of this to function at some point soon. And so, I think before you know it, there's going to be AMMs trading securities in like, not like a scary way of like, oh, it's a security and it's US persons and like, oh my God, like, Gary Gensler is going to sue everybody. In the opposite, where it's you have securities that anyone can own and they're trading in the open on AMMs, and it's done in a way where everyone high fives and says like, this was the right way and it works. And it's okay. And like, this is like the best of all worlds. You combine, the known safety nets of regulated stuff with the awesome composability and innovation and degen-ish stuff of crypto, and you get a best of both worlds.
Yeah, I agree. There's another way I've been thinking about this is that crypto kind of gave like Bitcoin and ETH and maybe others soon to the Fidelities and BlackRocks and Invescos in the form of ETFs in exchange basically for higher prices, right? For wider adoption and ownership. We kind of gave it to them.
Number goes up, and that's kind of a very important metric.
It would be nice if they would give us stocks in return. They're not doing it though, right? So we're kind of taking them. And this SEC is appears very publicly on board with figuring out how to allow that. And so one thing that people ask me a lot, like Superstate has a great company and great business, and that's why we love working with them and picked them to work with on this. People are always like, well, what's the revenue opportunity for Galaxy, right? And I think when it comes to our stock, the revenue opportunity might be somewhat limited. We just like if it was on NASDAQ, we can't just like trade and do stuff with our own stock, right? we could do it for others though. And you could imagine a company that's, one of the biggest spot crypto trading firms, futures crypto trading firms, lending firms, right? On-chain asset manager, investment bank. Like, we're doing all that stuff today for crypto. But if stocks were also crypto, all of a sudden it's like, well, wait a second. Because I just saw that SEC CFTC notice about how they're going to let national securities exchanges trade crypto and FBOTs and DCMs, and I'm sort of like, well, then they got to let crypto trade stocks like that. It seems like we're heading towards a conversion, are we not?
Yeah, I think at the end of the day, as long as you can, from a security and operational perspective, handle the asset without losing it, right? An exchange is an exchange. It shouldn't matter, the ticker that's being traded on it, whether it's BTC or TSLA or GLXY or, yen. It's like,
Right.
if you're an exchange, it's just different tickers, right? And so, like, yes, there's very different custody and settlement for the actual assets, right? Crypto is custodied and settles very differently than stocks, right? But aside from that aspect of it, like, why should it be so different?
And it should be easy to settle. It is easy to custody and settle at this point. It's way different though. But actually it should, frankly, I think it's been a lot harder for us to bring stocks into crypto than, from a technological standpoint, frankly, even than it has been for TradFi to bring in crypto onto their platforms, because custody and crypto, send and receive, you don't even need a system. It's built in natively. Like, you know what I mean? Like, the tech is pretty good and widely available, especially for major blockchains. There's tooling and dev kits and all that stuff. So it's just a very exciting time, Robert. And, I don't know, I guess a couple other questions I've been asked, maybe I'll put to you. One was, why Solana? Why not ETH? In particular, your background building on Ethereum and pioneering there. Why Solana first?
Yeah, a couple of reasons. I know Solidity quite well. My entire time in crypto, going back to 2017, I've been building in Ethereum. I understand it. I understand the challenges of it. I understand, the warts of it and what's great about it. Part of it is a challenge, to be able to be omni-chain, starting with something that I'm not as familiar with, because, in my view, like, I know Ethereum. If I can do Solana and Ethereum, well, then, like, the third chain, the fourth chain, the fifth chain is a lot easier if you're building a system that's generalized. And at the end of the day, we support both. Galaxy could launch on Ethereum probably tomorrow, if we wanted. I actually can launch on Ethereum tonight, if Galaxy wanted, right?
You mean in terms of Superstate's technologies?
Yeah,
yes.
It's literally like, it's a field in a dashboard that Galaxy can check.
So you're saying almost learn and build for Sol with an eye towards also Ethereum, so that you could eventually do both.
Yeah, exactly. We can do both right now, right?
Yeah.
I'm serious. Like, if Galaxy wants to launch on Ethereum, we can do it on this
I'll take that
podcast.
back.
Yeah. Just, text the rest of the crew. But, we're set up for both. The first launch is, in my mind, preferable and something that, like, I haven't launched something on before. I think when you're building a multi-chain platform, you need to make sure that you are multi-chain, like, ready, and everything is built to an incredibly high quality standard, and you're ready for out of the box building a system that spans beyond chains. Because at the end of the day, like, what we're building is the ability for a share to live simultaneously in the NASDAQ, on Solana, on Ethereum, on a chain that hasn't been invented yet. Shares don't have to be locked down and, like, chained up and put into a cave. They can be more places at once. And that's the theory behind Superstate. This is like the deep lore, but, like, that's also, like, where we got the name Superstate from, borrowed a little bit from quantum mechanics. And the idea that, like, shares of an asset will live in many places simultaneously. And so we're going to be multi-chain. We're going to launch things on Ethereum. We have other issuers that prefer to launch Ethereum first, right? But it was really, like, a readiness and operational preparedness thing to start with something that I was a little bit less experienced in. Second, it's got a large retail audience. This is an institutional product. I thought it'd be interesting to try something that's like, the ecosystem is more degen, and like I'm seeing it like already, like day one, it's like the amount of scams and like
Oh my God,
nonsense.
dude, there's so many like fake GLXYs. By the way, I should tell the audience, make sure you go to our website or go to Superstate's website, which also has it, and make sure you, if you are looking at a GLXY token, ensure that it is the correct token. We publish, I'm not going to read out the contract address here because it's long, but check because there are many scammers out there being pretty creative. And as Robert said too, at this moment, there are no GLXY share tokens trading in DeFi apps, period. So if you see on Radium or Orca or anything like that, like that's not ours. You can easily check the contract address though, but just be careful. That stuff will come though. I agree. Hopefully soon. I will add, we loved Solana. Galaxy's big in Solana. We're one of the largest validators in Solana. It's fast. It's, we think, proven. It's designed initially to be, what did Anatoly say? The NASDAQ of blockchains. Wasn't that one of his original taglines for it? So we thought it was just very appropriate. But we're interested. I will say one thing. I don't know if you've thought about this. We are very focused, though, that we believe that, in particular, equities, but other centrally issued liabilities that are tokens, whether it's a security or some other thing issued by a real world issuer, should primarily be issued on layer 1 blockchains and maybe can be abstracted into layer 2s like an Ethereum rollup, but shouldn't be natively issued on rollups today. Have you thought about that, Robert?
Yeah, I mean, it's a really interesting question. I agree. Like we're starting with layer 1s generally. You can think of what we're doing with like the issuance of a token as being a little bit akin to how USDC or USDT are natively issued by Circle and Tether, in that you have issuance that's native, and it can happen on an L1, it can happen on an L2, but the bridge is sort of this authoritative company that's responsible for making sure it's like the official token and it's accounted for correctly.
Right.
Now, our whole business is accounting for things correctly, right? And so while we're starting with L1s for how we're launching these tokens, like there's nothing that prevents us from launching it on an L2 or an L3 or some other system as native issuance. What we're not going to do is have, bridged tokens going from like an L1 to an L2. If it's on the L2, it's going to be a native issuance. And the reason for this...
Circle did a really good job with this with their, CCEIP? Is that what it's called?
Yeah, CCIP,
yeah.
Or
Sorry,
CCTV.
CCTV. Yes.
Yeah, they've done a great job with this. Like it feels pretty intuitive and native for
right. Rather
USDC.
Than bridging the USDC coin, you effectively just like send a message to Circle and they burn yours and reissue it to the wallet you choose on a different network. So it's always just from the issuer.
Exactly. And that's a really sound model. And, I would prefer to have native Galaxy on many chains, including L2s, than like bridged Galaxy where, things sit inside a bridge contract and you get into weird questions of like, who owns them? Like, how do you account for them? Like,
and it actually sounds kind of like a security entitlement at that point and not a direct security.
Does the L2 become a security entitlement if it goes through a bridge contract first?
Right.
Like, kind of, maybe. Like,
yeah, maybe.
Technically, it might be a different asset, right?
Right. Yeah, and the other thing about the L2s to me is like, and I'm specifically thinking about optimistic rollups on Ethereum, which I think are a great achievement. But they are centrally sequenced today, and they don't have they're not decentralized. And effectively, one sequencer controls things like transaction ordering or fees or settlement finality, right? And the way the Ethereum community in particular has sort of become okay with this is that they have unilateral exit, right? If you get censored or whatever, you can replay your transaction on the L1. But that wouldn't be true for an issued asset unless it exists on both and whatnot. So to me, it's always like I feel like assets should be issued on L1s and then perhaps go to L2s in some way and not the other way around. But again, this is very early. It's sort of, I'm sort of just thinking about this stuff and why we liked Solana or ETH. And in our case, Solana is the first place to do this.
I mean, frankly, I think they're both phenomenal chains. Like when I look from a business perspective on like where do you issue tokenized equities, there's like only two chains that matter for now, right? It's like
Yeah.
Solana and Ethereum. It's like saying like, they're apples and oranges in a lot of ways. Like, it's not like, oh, like, we picked Solana, we picked Ethereum. It's like, no, they're like, they are in some order, absolutely number one and number two, and there's a big drop off before you get to something else, right? And they're actually quite different. And so like, we're going to be working with both.
It's exciting, the fact that they are different. I always like this when cryptos truly are different. The days of super high beta, everything trades the same because it's like, oh, Bitcoin, ETH, Sol, whatever, they're all the same. I long for them to be different. And I used to tell this to my Ethereum friends who talk about, ultrasound money. And I'm like, guys, stop trying to be Bitcoin. Let Bitcoin be Bitcoin. It doesn't do a lot of the stuff you do because it doesn't want to. And you shouldn't do the stuff that it's good at because you won't be that in particular, scarcity, digital scarcity. You're not going to be as good at, you're not as immaculate as Bitcoin's digital scarcity.
Well, they thought they were better. Okay.
I know. It's even worse. They thought they were
it's not even inflation, it's deflation.
I know. But I'm just saying, like, guys,
ultra sound.
I know. This is like Justin Drake too, and Danny Ryan, and it's sort of like, guys, you did that, okay? Like Bitcoin's like it's like gold because it hasn't changed is one of the big parts. It wouldn't matter if it was 21 or 42 or 84 million. It's the fact that it never changes, right? But anyway, I just like, separate from the Bitcoin ETH thing, I want them to be different. That's exciting. That's diversity in the market. There could be different reasons that you need, a 400 millisecond slot time on Solana instead of a 12-second layer one, block time on ETH, like, which, by the way, is still pretty fast. Like, I'm not saying it's not, right? So I agree. It's sort of like, there could be a lot of different reasons to do it on different places. And that's one thing we loved about you guys too as technologists is, you're not maximalist. You're stock maximalist. You're tokenization maximalist.
I'm a tokenization into DeFi maximalist.
Yes.
Right?
Yes. Yeah, I agree. So look, this has been a great conversation, Robert. I really appreciate it. I encourage people to check out Superstate. By the way, and as we said, you can't really trade it on chain quite yet, but we think that will come. But in general, you are free to go and register at superstate.com/register. It's like opening a crypto exchange account, right? You enter your information, take a picture of your ID, right? To KYC. And then anyone who is KYC'd with Superstate can hold and transfer for now, but eventually trade securities that have been tokenized by Superstate, including GLXY, but not just GLXY. When Superstate inevitably tokenizes many stocks, that one central KYC will let everybody do it. So, and there's no, and if you are an existing Galaxy shareholder who wants to transform your traditional shares into tokens, we explain all how to do that in our white paper. You can read it at galaxy.com/research. It's pinned to the top there. So and we even showed my screenshots of chatting with my Fidelity rep, literally in the chat. I didn't even have to call. It's not as hard as people think. It's still a little like clunky to sort of traverse the bridge. Not on your side, really on the TradFi side, but it is possible. So I'm not encouraging that necessarily. We've got a whole range of disclaimers and disclosures at the beginning and end of this podcast, and also in the paper and on our investor website and on superstate.com. But we do explain a lot more about this and how to do it if you're interested. I think it's very exciting. I do think we're going to look back in 5-10 years and think that this is sort of the Uniswap moment where it's like, wait a second, DeFi is not just MakerDAO. It is like you can trade anything, and and Uniswap today is 20% in the DEX to SEX ratio, so it matters. It's a huge part of crypto trading, and I think tokenized stocks will be a huge part of stock trading.
I think so too. I mean, the thing, just to leave on one note, that excites me about all of this is, if you wanted to start a fintech product in the US that like did something differently with stocks or traditional banking or like any of the assets on Wall Street, like it was always really, really, really hard. And like the innovations you would make were like really, really, really tiny. You'd be like, oh, I started a fintech company that does this like one thing just a little bit differently. And it took us like 3 years of negotiating with like 9 different service providers and vendors and like all of this stuff. And when crypto came around, it was like, okay, it's a totally separate system, but like you can innovate to your heart's content, go wild, build stuff that's never been built before, build stuff that looks like old stuff, but is different and better, right? Like there was like no obstacles in front of developers and builders. with tokenized equities, I hope we get to the point where you like truly get like the programmability for traditional assets that's never really existed. Like where someone can wake up with an idea and it's like, you know what, I'm going to build an app that like mashes up these stocks in some interesting way. And like, who knows what they built, but you'll get this sort of pace of crypto, unbridled innovation with traditional assets. And we're going to get really cool results from it. We just have to wait.
Robert Leshner, CEO and founder of Superstate. Thank you so much for coming on Galaxy Brains, Robert.
Thanks for having me, Alex.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Robert Leshner, CEO and founder of Superstate, and our good friend, Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.